Are you curious about how regulations will shape the future of the cryptocurrency industry? From consumer protection to mainstream acceptance, the impact of regulations on the crypto industry is far reaching. Dive deeper into the topic and discover the potential benefits and drawbacks of a comprehensive regulatory framework. With the fast paced innovation and decentralized nature of the crypto industry, it's important to stay informed on the latest developments. Watch the video now to explore the impact of regulations on the crypto industry. Cryptocurrency regulations vary depending on the country. In some countries, such as Japan and South Korea, cryptocurrency is considered a legal form of payment and is regulated by government bodies such as the Financial Services Agency and Financial Supervisory Service. In other countries, such as China and Russia, the use of cryptocurrency is heavily restricted or outright banned. In the United States, the regulation of cryptocurrency is still evolving and is currently handled by a patchwork of state and federal agencies, including the Securities and Exchange Commission and the Commodity Futures Trading Commission. The IRS also considers cryptocurrency as property for tax purposes. Overall, the regulations tend to focus on issues such as anti money laundering and countering the financing of terrorism and consumer protection and tax compliance as technology and the market continue to evolve. It's likely that regulations will continue to adapt the change in response. Cuba declared in August 2021 that it will legalize and regulate cryptocurrency, and the Central Bank of Cuba released regulations for all providers of virtual assets in April 2022. A growing number of nations have started passing rules and regulations to provide investors with a secure environment. There have been numerous discussions in recent months about establishing international laws for the cryptocurrency sector. A system of rules that controls how businesses and organizations operate all over the world is known as against the frauds, to be honest, and to encourage fairness and transparency in the economy. One of the most important implications of a global regulatory framework is that it would bring more transparency to the crypto industry. This would likely lead to more institutional investment as well as an influx of new users who are looking for a safe and regulated way to invest in digital assets. A global regulatory framework might be able to stop fraudulent activity in the cryptocurrency industry. Detractors would be well aware of the repercussions of breaching the rules if clear rules and norms were established, and investors would be better protected from losing money to dishonest individuals. Last but not least, a global regulatory framework will contribute to elevating the value of crypto assets. Demand for crypto assets is likely to rise along with prices as more individuals develop confidence in a transparent and secure trading environment. How to handle cross border activity is one of the major challenges. The operation of crypto assets and businesses frequently spans numerous jurisdictions, making it challenging to create a coherent regulatory framework. Making sure that any global regulatory framework is compliant with already existing rules and regulations in various jurisdictions is another difficulty. Given that a large portion of the cryptocurrency sector is decentralized, this is very crucial. It is important to remember that creating and implementing a worldwide regulatory framework will probably take some time. Businesses in the sector will still have to navigate a challenging and dynamic regulatory environment in the interim. Benefits of a global regulatory framework. Number one, clarity and certainty. Businesses would be clear about the regulations they must follow, making it simpler to conduct businesses there. Number two, level playing field. Since all businesses would be subject to the same rules and regulations, smaller firms and larger incumbents would compete on an even playing field. Number three, greater regulatory certainty and clarity help boost investor confidence in the sector, which encourages more investment and industry growth. Number four, more innovation. As firms strive to create new products and services that satisfy consumer needs, a fair playing field and enhanced investor confidence may promote more innovation in the cryptocurrency sector. A global regulatory framework is anticipated to have good overall effects on the crypto business. Regulations on the cryptocurrency industry will have a significant impact on the growth and development of the market. The nature of the crypto industry, which is decentralized, fast paced, and global, makes it all the challenging space to regulate. However, regulations can play a crucial role in providing a framework for businesses and individuals to operate within and can attract more institutional investors and traditional financial players to the space. On the positive side, regulations can increase the legitimacy and mainstream acceptance of cryptocurrencies. They can provide a framework for businesses and individuals to operate within and can attract more institutional investors and traditional financial players to the space. This can also lead to better consumer protection and greater tax compliance. Regulations can set standards for the handling and storage of customer and, the data. as well as requirements of the security of cryptocurrency exchanges and wallets. This would help to reduce instances of fraud and hacking and would give consumers more confidence in the safety of their investments. Additionally, regulations can provide clear guidelines for the reporting and taxation of cryptocurrency transactions, which would make it more difficult for individuals and businesses to evade taxes. Regulations can also have a positive impact on the overall legitimacy and mainstream acceptance of cryptocurrencies. A consistent and comprehensive regulatory framework would provide clarity and certainty for businesses and individuals looking to center and enter the market and would likely attract more institutional investors and traditional financial players into the space. This can also lead to better consumer protection and greater tax compliance. On the negative side, regulations can stifle innovation and experimentation in the cryptocurrency market. A heavy handed approach can make it difficult for new projects to compete with established ones, and they can limit the freedom of individuals and businesses to operate in the market. In addition, some governments may use regulations to restrict the freedom of their citizens or to impose capital controls. This could lead to some crypto businesses moving to more crypto friendly jurisdictions. Moreover, the implementation of regulations can be a complex task. The decentralized nature of crypto, the fast paced innovation, and the global reach of crypto assets make it hard to have a one size fits all approach. Regulators need to keep up with the technology and have to have the right personnel and expertise to understand the crypto market. In summary, regulations on the cryptocurrency industry can have both positive and negative effects, and it is important for regulators to strike a balance between protecting consumers and fostering innovation. They need to consider the implications of their actions and strive for a regulatory framework that is adaptable, effective, and efficient. This will play a crucial role in enabling the crypto industry to reach its full potential and provide benefits for the global economy. In conclusion, the impact of regulations on the cryptocurrency industry is a complex and multi phase issue. While regulations can provide a framework for businesses and individuals to operate within, increase consumer protection, and attract more institutional investors, they can also stifle innovation and limit the freedom of individuals and businesses. It's crucial for regulators to strike a balance between protecting consumers and fostering innovation in the crypto industry. As the market continues to evolve, it's important to stay informed on the latest developments and to understand the potential impact of regulations on the crypto industry. If you're interested in diving deeper into this topic, subscribe to our channel so you would stay up to date on the latest developments in the crypto industry.